I'd like your advice on how to understand annual reports, what you look for, what's important, what's not important, and what you've learned over the years from reading thousands of reports.
Well, we start by looking at the reports of companies that we think we can understand. So we hope to be reading reports, and I do read hundreds of them every year. We hope to be reading reports of businesses that are understandable to us. But we've learned a lot from annual reports. For example, I would say that the Coca-Cola annual report over the last good many years has been an enormously informative document. I mean, I can't think of any way if I had a conversation with Roberto Goizueta or now Doug Ivester, and they were telling me about the business, they would not be telling me more than I get from reading that annual report.
But I was reading recently in Fortune magazine that when you invested $500 million in PetroChina back in 2001 or 2002, all you did was read the annual report. I was thinking that most professional investors with the kind of resources that you have would have liked to have done a lot more research and talk to management, maybe regulators, et cetera, et cetera.
Investors never read annual reports. Never read annual reports. I thought he was kidding. But no, not only was he serious, but all his fellow panelists were nodding in violent agreement. Honestly, I couldn't believe it. So just in case there are others out there who also hold this mistaken belief, let me lay this one to rest once and for all. The annual report is an incredibly important document for investors. It's a formal document of record that's been subject to assurance. It adheres to globally recognized standards, and management gets in deep trouble if they mess it up. As a shareholder in a company, you have to have something like that, something you can pretty much rely on to give you some sort of a handle of the performance and position of your investment. Without it, investment would be like a stroll down the Vegas Strip. Really, it would be a disaster.
What do you think separates a great investor versus an average one? The answer is very simple: insight. And how do you think these great investors learn their insight? They do this mainly by reading annual and quarterly reports. And these provide them with great understanding on the business model of their target company, the market in which the company is operating in, the competition of the market, and the financial performance of this company. As a value investor myself, I would love to read more 10Ks, 10Qs, and earning calls reports, but the truth is that I don't. I know I'm not alone in this situation because many of us value investors, these days we invest in the stock market based on articles that we see in the news, videos that we watch on YouTube, based on some influencers. And this typically results in us knowing very little about the companies in which we put our money in. And this also results into panic buys, panic sells, and that's not great. I'm not saying this is a very bad thing, but wouldn't it be great to have a great understanding of the company in which you put your hard-earned money? This is not rocket science, right? We all agree that reading annual, quarterly, and earning call reports will provide us with great insight that will take our investment to the next level. But the question is, why don't we do it? I think the answer is simple. 2 reasons. First, time. We all have 9-to-5 jobs. We have families and we have things to do. And nobody doesn't have hours to spend on annual reports, right? Second, the lack of financial and accounting skills, because we are not all from financial backgrounds, right? Because these reports are quite complex to read, to understand, and to digest. That's the reason that I could give. What's your reason? Also drop in the comments. First, your reason and the process that you go through in selecting a stock or in investing in the stock market, right? If you can do that in the comment, that would be great. Coming back to what we were talking about, just pause and imagine a world in which when you are interested about a stock, you go to a platform, you type the name of the stock or the ticker symbol of the stock, and then in 5 to 10 minutes, you know everything about the stock, product and the services of the company, its market, the strategy of the company going forward, its competition, and then its financial performance. I think that would be great. That would be phenomenal, because if you were to compare this with a seasoned equity analyst from Goldman Sachs, for example, to review an earnings calls report. That will take him 1 to 2 hours to do that thoroughly. And for an annual report, this can take up to 15 hours. And you and me, if we were to do that in 5 to 10 minutes, I think that would be amazing. Just think about understanding your stock to the point that you can predict the stock's long-term trajectory. I'm not talking about short-term here. This is for traders. Stock goes up and down. But if you really understand your stock, you can predict its trajectory, right? Second, think about being very strategic in picking your stock. You are strategic to the point that when people are offloading their stock and panicking, you are so comfortable and so relaxed because you really understand the value of your stock. And as a whole, just imagine how this will impact your investment portfolio. I think this could easily take your current investment 2x. I think that'll be really amazing. If such a platform were to exist, what features would you like to have on that platform? Now, let me show you how I can quickly review a stock around 5 minutes, in less than 10 minutes, basically. Let's pick a stock that everybody knows. So let's go with Apple. Been a great stock in the past few years. And we know that now they are lagging a little bit in terms of AI. So let's try to understand if Apple is still a good stock or not. What I'm going to do here is review 2 reports. So first, I will go through a 10Q. So 10Q quarterly reports. And the goal here is just going to be to understand the top line. By top line, I mean the revenue, top line figures, and bottom line. So bottom line margin, cash flow, and stuff around those lines. And also I will be going through the earning calls report. And the goal here is to get the narrative to back the figures that I will find in the 10Q. Without further ado, let's go. So we type Apple. Apple is already here. Let's just click on it. Now we have Apple's 10Ks, 10Qs, and then transcript. So let's pick the last 10Q. This is my research history here. I've done some stuff on Broadcom, Boeing, and Google recently. So just pull down the side. And then here what you can see is that on the left side, I have the 10Q report, as you can see. And then on the right side, an AI-backed tool that allow me to get these questions and basically allow me to digest this long document. So what I'm going to do is avoid typing because I'm a very lazy person and I'm just going to be trying to use the questions on this platform. So let's go for top line figures. So revenue. So we have some questions here. Let's go to the analyzing quarterly performance, try to see if we can find something on revenue. So we have display in a table the current and previous quarter total revenue with percentage change. Let's go with that. Okay, so we've got our figures. Quarter 2 2024, this is the number. Quarter 2 2023, and simply there is a decline in Apple's revenue by 4%. And this is interesting. If you want to see exactly where this information was taken from, you just press on the source. Then here we are. What we need to know now is the source of this decline. We need to take it down to a product level or a region level. So yeah, let's go with the region first. Come back to my question guide, look for region. Here we go. And the question was display in a table the revenue by geographic region. And here we have our answer. So basically the West is pretty flat, right? -1 and 1%. So that's very flat. But in China, Japan, decline of 13%. And then the rest of Asia, decline of 17%. So revenue is declining. And this is basically coming from the East. Let's get product. Go to analyzing quarterly product performance, product, get that. So we will want to see in a table the quarterly comparison broken down by product. So here we have Apple's product category, the iPhone, the Mac, the iPad, the wearables, so the watches and etc. And then the services. So services is everything that's related to like cloud, Apple Store. What we can see here is the services is performing well. Year on year, 14% increase. Mac, the same, 4% increase as well in terms of their revenue. And then everything else is just bad, right? iPhone dropped 10%, iPad dropped 17%, and then the wearables drop 10%. So revenue declining all from Asia is a volume issue, and product concern are iPhone, iPad, and the wearables. Pretty straightforward story. Let's continue. Let's go a little bit toward margin now. Let's try to find stuff about margin. So by margin, I think I'm going to be looking for operating margin. Go and by operating margin for people in the financial kind of realm is just taking the revenue, removing the cost of sales. So the direct cost related to making the product, and then taking out as well any cost that's like very general. So talking about marketing, for example, and those rent and utilities and those type of costs. So that will give us the operating income. Here is our operating profit, so operating income, and it's broken down by region. So what you can see here is that it's still pretty strong. So in the West is basically around 40%, in China around 38%, which is very, very good. That's for that's for 2024. And in terms of comparison, you see that in the West it increased, so went from 40% of the revenue. Went from 36% of the revenue to 40%. Europe, 39% in 2023, Q2 to 41%. In the East, there is a slight decline in China of 1%. This is flat, and this is almost flat as well. So in general, I would say the operating margin is pretty consistent, it's pretty strong, so which is really, really good. Let us check one or two other financial items, and then we move on to earning calls. So let's double check operating cash flow. Operating cash flow, which is basically the amount of cash that the company makes from selling its product. And this is different from profit, right? Because profit is not money. This is a little bit financial, but just stay with me here. Okay, so this is the cash from operations, and you can see that this is very strong as well. Is a 62 billion, and there is literally very, very tiny increase, so it's really good as well. So margin is really good. Cash from operations as well is really, really good. So those are the key metrics. Let's maybe double check one last one. Let's check the cash on the balance sheet. Okay, so this is just the cash on the balance sheet, and this the one actually they have on their cash flow statement, and this doesn't include the marketable security. If you were to add the marketable securities, this will take it to around, I believe, 60 something, because I know that Apple has a lot of cash on their balance sheet. We can continue and check in other things that are, I would say, important as well, but time wise, let's just leave it here. Otherwise, we could check the debt, for example, and other stuff to have, more understanding. So yeah, let's move on to the earning calls report. So let's get the earning calls, just Apple again, come to transcript. So that's the earning calls transcript. Let's get the last one. We want to understand the performance. Let's understand what are the drivers of the change in the revenue. So what is management saying? They are saying that the iPhone revenue was 46 billion, down to 10% year on year, and that was due to a 5 million impact from the previous year. Services all-time high, and we know all these things already because we saw them in the 10Q. We are not learning anything new here. Let's go with another question. Okay, let's see why the other product performed below expectation. So we asked the question. So the performance below expectation was primarily due to competitive market conditions, particularly in mainland China, where other products did not, as well as the iPhone. This indicates that there is still work to be done in those segments, etc. So we learned this as well from articles, and I'll just talk a little bit about for another question around how the company is trying to solve this. Let's check that. What initiatives did the company take to mitigate the impact of the challenges? Yeah, let's try that. So what they are saying is that the company took several initiatives to mitigate the impact of its challenges. It increased recycled material products in their MacBook. They invested in new solar and wind. They committed 200 million nature-based carbon, etc. And they have a new supplier, etc. For me, this is very CSR. So corporate and social responsibility. So I'm not taking this as an answer, Apple. So this is not happy for this. If I'm kind of investing in the company, I want more kind of concrete answers. Let's try to understand what the future holds for the company by just double checking the strategy or prediction, basically looking at the next quarter, right? So what is their outlook on the next quarter? They are saying that the total company growth expected to be in the low single digit, and services expected to grow double digit rate. I mean, services is growing quite high already, and the iPad is expected to grow in the double digit rate as well. The iPad one, I'm a little bit not concerned, but I have my doubts on that because the decline was quite high as well. But yeah, that's a quick review of Apple. Now it's time to make our decision, and we've learned quite a lot of stuff on Apple in a very short time space. Quick summary: Apple has a revenue issue. This is mainly a volume issue coming from the East. Volume are declining there due to local competition. inflation, and this is impacting most products except the services segment and also the Mac. In terms of financials, operating income is very, very good. They have a lot of cash on their balance sheet, and the company is actually very good financially. In terms of headwinds, we know that they have their case versus Epic not long ago. The EU fined them for some of their practices around their Apple Store, which relates to their services segment. They have also some issues around the sensor in their Apple Watch as well, and those will impact the wearable segment as well. That's what we know so far. And at the moment, the Apple stock is trading at around 230. So based on that price and all the things I said before, if I were to decide on buying more Apple stock now, I'm not going to buy it. I'm just going to wait. And this is waiting because of two things. So the first one is to see how Apple get on with resolving the issue regarding the volume in the next quarter, to see if that improves, because I wasn't convinced by their answers in the earning report. And secondly, I would wait for their generative AI implementation in their product to see how customers kind of care about those products or how customers appreciate those products. And then I will make a decision. So that's how I will take it. You wait because now the price is a little bit too high. So the platform that you see me use is called Charlie AI, and me and my co-founder created it. And this platform is basically supposed to take value investors' investment to the next level and resolve the problem that I discussed before regarding us not having time to read annual reports and really comprehend these reports. So this platform will take your investment to the next level. Go sign up, log in, and use it for free. Thank you very much. Please let me know what you think of my analysis, and also, are you an Apple stock holder? What are the issues that you face in selecting stock? I'll reply to every single comment, and thank you very much.